Hey, what is going on, guys? Trevor here. Welcome back to another video. In today's video, we're going to be talking about taxes and the stock market. We hate to think about taxes, we hate to talk about it, but they're super important to understand, especially when it comes to investing into the stock market. So the layout for this video, guys, is going to look like this. How do taxes work in the stock market? I want to go over the difference between the long-term capital gains tax rate and the short-term capital gains tax rates. I'm also going to answer the question under here of when are you taxed in the stock market? Is it when you sell the stock? Is it when you buy the stock? That's going to be a very important section of this video as well. Secondly, I want to talk about how you can save the most money when it comes to taxes and the stock market. There's a tool in here that I really want to share with you guys that is super important, so make sure to stick around for that. And lastly, I want to answer the question really briefly, what happens when you sell a stock at a loss? That's a very important question that I always get. I want to answer it in today's video. So thank you guys so much for taking the time to watch this video. If you're new here, please consider subscribing. If you get any value from this video, please hit that like button. It really helps me let me know that you guys are getting value from these videos. I'm very new on YouTube, so I'd love to know that I'm giving you guys some value on the first couple videos that I'm making here. So thank you guys so much for taking the time to watch, and let's get into it. Okay, so when it comes to taxes and the stock market, how much you're going to pay in taxes really depends on how long you hold a stock for. So let's break this down a little bit more. This channel really talks about long-term stock market investing, right? So that means when I go to sell a stock, I'm going to be taxed at a long-term capital gains tax rate. So what does this mean? So by definition, long-term capital gains tax rate applies to any stock that you've held for over a year for profit. So let's go through a quick example of this. So right now we are in August of 2020. Let's say Apple is trading at $100 and you decide to buy one share of Apple for $100. About a year later, Apple is trading at $150, and in September of 2021, you decide to sell the stock. You would be taxed at the long-term capital gains tax rate because you held this stock for over 1 year. This is 13 months to be exact in this example. So in this example, you would have made $50 profit or $50 in capital gains, but this is before taxes. So how much are you taxed on that $50 of capital gains or $50 profit? Well, it really depends on your taxable income, but you can expect anywhere from about 0%, 15%, or a 20% rate. So it's super important to remember, guys, that $50 of profit or that $50 of capital gains, you're only going to be taxed on that $50, right? So that's super important to remember, and this is one of the many benefits that you get for being a long-term investor. We'll get into the short-term capital gains tax rate in just a second. So generally, long-term investors get more tax benefits for holding a stock long-term than somebody who is paying the short-term capital gains tax rate. Now moving on to the short-term capital gains tax rate, this applies when you sold a stock within a year or less. So let's look at an example of this. So let's use the same example that we just did previously here. So again, we are in August of 2020 and Apple is trading at the same $100, let's say, and you decide to buy one share of Apple for that $100. Now just 1 month later, Apple hits $150. Now this time you decide to sell. Now notice here, this is just 1 month since you purchased this stock, which in this example would be September of 2020. So since you sold the stock under a year, this would fall under the short-term capital gains tax rate. So how much are you taxed on that $50 of capital gains or $50 of profit? Well, it varies for everyone, but you can expect to be taxed at your current tax bracket, okay? But again, you're only taxed on that $50 of profit. So I hope I'm making sense here. If you guys need any clarification or have any questions, please let me know in the comments and I will do my best to answer those. So again, the difference between the long-term capital gains and the short-term capital gains, long-term is anything held over a year, and the short-term is anything sold less than a year, okay? So you're going to pay different taxes depending on if you hold a stock for more than a year or less than a year. So this is very important to know, guys. You are only going to be taxed on a stock if you sell. Let's say your stock went up a lot that day, went up 10%, 20%. You're not going to be taxed on that, okay? You're only going to be taxed on the stock when you sell out of your position. Now, let's go through an example here. So let's say you buy one share of Uber at $30 per share in 2020. Now in 2024, 4 years later, the stock is at $100. So you still have that one share and you did not buy or sell any more than that one share, any more than your initial investment that you had. The only way that you would be taxed on that gain of $70 would be if you sold for a profit of $70. So you'd have to sell out of that stock to be taxed. So another important question that I want to answer in this video is how can you save the most money when it comes to taxes and stocks? Now there's many different ways that you can do this, but I want to introduce to you guys the Roth IRA. If you guys have not already heard of it, this video will change your life if you have no idea what the Roth IRA is. So Basically, this is something that I max out every year, at least try to max out every year, and I recommend that everybody that qualifies for it, I highly recommend that you max this out as well. So let's get into what the Roth IRA is. So basically, a Roth IRA is an individual retirement account. This allows you to pay taxes up front and allows that money to grow tax-free. So this means when you reach the minimum age of 59 and a half, you can take out the money tax-free. Now there's some eligibility requirements for this that need to be met, but this is a tool that is very powerful for something like compound interest. Now I'm not going to get into all the requirements in this video, but if you guys would like me to make a video on all the requirements within a Roth IRA, I made a previous video on this a while back, but I can surely make an updated video for you guys if you guys would like me to. Now the Roth IRA is not the only tool when it comes to individual retirement accounts with great tax benefits, but this is a great way that you can save the most money in my opinion, because if you put something like a dividend stock in the Roth IRA, those dividends can grow tax-free. So let's look at an example here. So this is a compound interest calculator here. I highly recommend you guys plug in some numbers yourself here after watching this video, play around with different numbers. It's a very good tool to use. So let's say you currently do not have anything in your Roth IRA. You are 20 years old, you're like, hey, Trevor's awesome, he's telling me what a Roth IRA is, I'm going to go set one up. You should definitely do that. But let's say you plan on contributing the current maximum of $6,000 per year for the next 40 years. So until the age of 60. So we can expect somewhere around a 7% interest rate. So in total, the future value of you contributing $6,000 every year for 40 years will give you a total value of $1,281,657.42. And for those of you wondering, your initial investment over that time period was $240,000. So again, looking at these numbers, the initial investment over those 40 years was $240,000 in total. Your total return would be $1,281,657.42. That leaves you with a profit of $1,041,657.42 tax-free. Now you may be asking yourself, okay, well, where am I going to get that extra $500 a month to max out my retirement every single month? Well, if you're like most Americans and have an average car payment of $530, maybe you reconsider that decision. Personally, I am not a fan of car payments, and if you can just get a cheaper car for now and you can use that difference and put it towards your Roth IRA, especially if you're young, I highly recommend doing that. Now again guys, this is just a very brief overview of the Roth IRA. There's a lot more that goes into it, and this isn't the only tool that you can use. But again, if you guys would like me to make a separate video on this, please let me know and I will be happy to do so. Okay, so the last thing I want to talk about real briefly here is if you sell the stock at a loss. So obviously, I hope you don't have to sell the stock at a loss. That would suck. But if you do, stock losses are deductible. Now that means that will reduce your taxable income. So it's really, really important, guys, to understand which stocks you sold at a loss so that you can reduce your taxable income. This will show up on your 1099-B, Form B. You're going to get that at the end of every year, every tax year. So very important to keep this in mind, guys, if you're selling a stock at a loss. Again, obviously that's not the goal, but you don't want to just forget about it. You want to be able to use that to your advantage any way that you can, right? So thank you guys so much for taking the time to watch this video. I hope it gave you a brief overview of stocks and taxes. If you guys have any other questions, please let me know in the comments and I will do my best to answer these. Remember, I'm not a financial advisor. I'm definitely not a financial expert. So you definitely have to consult with a professional before making any decisions like this. But I thought I'd make a quick video kind of updating you guys since we never talked about it on this channel. So again, thank you so much for taking the time to watch this video. I got more videos coming out Monday, Wednesday, Friday, and Sunday. So if you're new here, please consider subscribing and hitting that like button. It really helps out my channel. So thank you guys so much for watching, and I'll see you on the next one.